Good morning, traders. This is Michael James with Uncharted Profits Daily. Got another great trade setup for you this morning, this time on Qualcomm Incorporated, symbol QCOM, QCOM, which yesterday managed to rally despite the fact that the general market sold off. In doing so, QCOM closed above its minor bearish trend, which you can find by starting here at the June 16th high, drawing a trend line down, connecting as many highs as you can. As you can see, QCOM certainly closed above that trend line yesterday at a price of 116.63. But before we look at the specifics of this trade setup, I first want to show you something going on with the SPY that you may find interesting after the last few days in which the index sold off. All right, so here's the SPY S&P 500 ETF Trust, symbol SPY, which closed about 0.4% lower yesterday, falling well below the 10-day moving average, which it fell below back here actually on Friday as well. Now the SPY is getting closer to the 20-day moving average. That's this orange line running up and down the chart right here, which if you watch my other videos, you know I like to use the 20 when looking at moderate term trend reversals or continuations. In this case, it would be a bearish trend reversal off of these recent highs here, as the SPY has certainly broken trend over the last few sessions. You can draw a line there. You can draw a steeper one here. You see that close below both of those lines easily over the last few days. And though normally that would give bears something to celebrate here, we do have to watch out for the fact that the stochastic indicator is now reading at 18.21. That's a reading below 20. Any reading on the stochastic indicator below 20 suggests the stock, or in this case, the ETF, is oversold, and it might not have that much more room to run lower. Or, worse for bears, a bullish reversal could soon appear. And so, yes, in the grand scheme of things, stocks still look overbought on the year, but that does not mean they can't run higher still on some bit of good news to come out in the next few days, or simply because the technicals support it, which is typically the case. So yes, selective bear setups will still make sense for traders here, but keep your eyes out for bull setups when they emerge, like the one we're about to look at on QCOM. Now, one last thing before we get started, I do want to remind you that the methodology I'll be using here to look at QCOM is the same methodology I use when making my Uncharted Profits Daily alert picks, which I send out every day the markets are open after trading closes, with specific entry prices included on the chart for our members. If you want to receive those alerts, just click the link in the description on this video. You'll be taken to this page here. Click this button on the right-hand side here, hand-delivered free daily trade alerts. Fill out this information and then click Get Free Alerts Now. The next time I send one out, it'll come straight to your inbox with the entry price written on the chart for a specific trade setup. On a method that has done fantastic over the last year and a half, more than tripled our trading account that we've been tracking for our members. Okay, so back to QCOM, which, like I said, closed above that trend line right here. You could trace going from this high, this minor bearish trend that began on Friday, June 16th at the peak. In addition, QCOM also traded just barely above the 20-day moving average yesterday. That's the orange line here, just like on the SPY chart, same line. It reached above it and then ultimately closed below it. And that's okay because it was enough that the 20 SMA continued going up. We like to see a positively sloping 20 SMA, even if the 10 SMA is going down slightly. That's the 10-day moving average, this purple line right here. In addition to the moving averages, Qualcomm also set a higher low here along this green line relative to this line back here. Obvious longer-term higher low. You could even count this low here actually as well, which gave it kind of a double bottom action, even though this low was a little close to these. So probably don't count it there, but in the end, bullish formation no matter how you slice it. Finally, we have the stochastic indicator at the bottom of the chart here, reading at 15.85, showing that the stock remains very oversold in terms of daily candlesticks, despite the rally yesterday. And that is a huge deal. If you've watched my other videos, you know that I only like to take bullish trades, bullish continuation, bullish reversals, anything bullish, if the stochastic indicator is reading less than 60. In this case, It's even less than 20, putting the stock in technically oversold territory, which is great because it suggests that Qualcomm now has more than enough momentum to punch through resistance here at this recent high from June 16th along that red line right there. Low reading, it probably won't hit overbought territory by the time it encounters this line at resistance at about 125. And those are all great reasons why you may want to consider a bullish trade on this stock should it take out yesterday's high and potentially race toward the 10-day moving average right there. Now, if you enjoyed this trade setup and you'd like to receive alerts like this directly to your inbox with specific entry prices for each trade listed on the chart, just click the link in the description on the video below. You'll be taken to this page here. Click the button Hand-Delivered Free Daily Trade Alerts. Fill out this information and click Free Alerts. Now I send these out every day the markets are open with my number one trade of the day. And again, with that specific entry price listed right there on the chart for that trade. All right, I hope you enjoyed that setup. This has been Michael James with Uncharted Profits Daily, wishing you good trading. I will see you in the next one.